Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. It's a new week, but the same narrative. Tech is leading the way higher. Again, you saw non-farm payroll on Friday was better than expected, and that kept a bid under the market. It's been a heck of a run here for tech, but the S&P has joined, and other indices have joined along. But again, it's tech leading the way. Take a look at the heat map here. And again, same thing today. Microsoft, Google, Apple, Amazon, and then healthcare. And the biotechs and in the healthcare sector have really pushed higher. And take a look at it. We're going to look at this XBI. This is an equally weighted ETF in biotech. You have a new record high today. Of course, that is lifted to help lift the NASDAQ. But then you take a look at the IBB. Keep an eye on this. This is a market cap weighted index, and this is not made, or it's actually just poked its head out, but not having the same breakout as the XBI. So watch this to be a narrative this week that can continue to fuel the market, because it's not just the behemoths, but the healthcare sector in the biotechs, as everybody's looking for a cure for COVID or some sort of success, there's going to be winners out there, and there's definitely some speculation on it. But the other factor is these mega caps. They are leading the way. Apple, Amazon, Microsoft. But take a look at these charts, and it would seem that a chart like Apple, it's going to have to test that record high. And we called that record high going back to 324 was our target to the upside. We're probably going to test that again. And if you're trying to fade this move, you have to keep this in mind, that these stocks, Apple and Microsoft, they have a bullseye out there for the NASDAQ. And they're going to drive price action higher. Now, the S&P, you've seen the S&P, it hasn't had to run the same way the NASDAQ has. But overall, it would seem that the Apple and Microsoft want to achieve new record highs before they think about going the other direction. Now, let's shift gears here. It was an interesting day across for commodities as the dollar was a little bit stronger. We saw gold start to back off on Friday from what was a very good finish to the week before that non-farm payroll, and then afterwards it fell back. But take a look at this chart here for gold. You have a wedge. We talked about it on the Morning Express today. You have this wedge pattern, and it's going to move. We expect to see a decisive move. If not this week, then we're going to see it next week. Now, we are unequivocally bullish gold over the intermediate and long term, with more emphasis after such a run on the longer term, because you don't want to be just chasing prices up here. But we do believe we're going to see gold higher. Manage your risk to the downside. We do think that this can break to the upside, but again, you have to be careful here because we're going to see a directional move, and there's no guarantee, especially if that dollar strengthens, and you know we like a stronger dollar here. But take a look as well. Going on to another metal, copper. Copper is definitely on our radar today as it hit exactly to a 50% retracement and right into the thick of the selling here. So you got this nice move up here in copper, and I think it's time for a little bit of a pullback. Now, copper can pull back. There's a number of reasons here this week as we have data all throughout the week. But Powell talks on Wednesday. You have Chinese industrial production, fixed asset investment, retail sales. You have a nice slew of data coming out of China on Thursday, and retail sales from the U.S. on Friday. You have Fed speakers sprinkled throughout. You have CPI tomorrow, so a lot to look forward to. Oh yeah, and that early look at New York Empire State Manufacturing on Friday too. Copper is going to move this week. One of the ways we like playing it is looking at a butterfly put spread for the June options that expire on about 15 days away from today. So you have 2 weeks. If you get into this, a 235, 230, 225 butterfly put spread, it costs you about 65 tenths of a penny to about maybe 70 if you're a little lower. Theoretical value right around 50 to 65. Copper is one of those options, though. Sometimes you have to pay up a little bit. It's a little thinner of an options market. But check out that. It's a nice, very cheap way for about $170. You can play copper to the downside. Gives you a potential gross payout of $1,250 if that needle is threaded perfectly. You can't plan on that needle being threaded perfectly for a butterfly put spread, but you can see the type of emphasis you could have on potential, and you're only risking what you're paying for that spread. Give us a call here. We'll be happy to talk to you about that. And then moving down the line from copper, again, look at this chart. Nice, perfect 50% retracement. It's going right into where that sell volume came middle of March. Another one to take a look at here. We always talk about crude oil. Crude oil is really building a floor here, 24 and a half. This today was when that news that Saudi Arabia will cut production another 1 million barrels per day coming in June. But the market gave it all up. And the real thing here is with crude oil, it's never been a supply issue. This is a demand issue. You're seeing, yeah, people are going back to work, or some of the economies, some of the states are loosening their restrictions. But ultimately, what's the demand going to be? Are people going to be flying? Are people going to be driving? And all the uses out there for crude oil, they're going to be limited here still. So the demand is not there, and that's why we do think that crude oil, at least this week, is going to get down here and test into about 23 and a quarter. This was previous highs. A number of technical levels aligned here. That's our downside target. We've positioned with different ways to take advantage of that. You can definitely give us a call. And then lastly, let's finish up here as we look into the currencies and what the U.S. dollar had a stronger day today. But you can look into this. The yen breaking down from a descending or ascending wedge pattern. It's broken down to the downside. There should be some more room to the downside there. And then the euro. It has this rising trend line that it keeps testing, keeps pushing against here, and it hasn't broken below it yet. But imagine if you get the yen having additional weaknesses, and you get the euro breaking through that trend line. It's going to fuel the dollar out above 101. It's something we've been waiting for quite a while here, for the last few weeks, more than a month. But give us a call. We're here to help with ways to plan, like that copper strategy, that crude strategy, or things we're doing in the dollar or gold. Give us a call, 312-278-0500. Remember, though, futures trading involves substantial risk of loss and is not suitable for all investors.